Coming up today, why stocks are poised to go higher. Will booming commodities upset the inflation narrative? A preview of the upcoming Nvidia earnings, and Ether rips ahead of the SEC decision. And welcome back to the daily market review, everybody. Hope you're doing well out there. And as a typical slow start to the week on Wall Street, with S&P 500 pushing up to all-time highs before pulling back a little bit late in the afternoon. And we've pretty much got every asset class uptrending across the board, all except volatility and the dollar, which we can see here in the VIX index, right down depressed at a 12 handle, and volatility risk premium pretty much flat as well. Option dealers not pricing in any big movements in the stock market in the near future. And just to get you prepped for this week, looking at the economic calendar, not a whole lot out. Got a bunch of Fed speakers, inflation data from Canada tomorrow, along with some more Fed speakers. Going into Wednesday, we get the FOMC minutes, in which we've already heard from Jay Powell, so there'll be no surprises there. Thursday, we'll be getting some PMIs across the Eurozone and from the States as well. That's probably the biggest release we've got all week. Then finishing out the week, just some durable goods orders and the consumer sentiment survey for May. And so looking back in history, no news is good news. In fact, the less big macro events we get, typically the better the stock market will perform for the week. Looking at the biggest news we get, GDP, CPI, PMI, the Fed's interest rate decision, jobs report and retail sales. When we get none of that, the stock market will rise on average 0.62% for the week. This week we've only got one, the PMIs, from the 6 most important economic data prints we get each month, and so the market should be set to continue drifting higher on this low volatility. The only other real big thing we got coming this week is Nvidia earnings, in which we've already got the stock trading up going into that Wednesday afternoon report. Has bounced back quite a lot the last couple of weeks. Semis pulled back, lost their market leadership. However, the biggest companies in the world are still spending big to get their GPUs, and their big supplier, Taiwan Semi, it's been trading well of late and increasing their supply to Nvidia. There's a look at Taiwan Semi and Nvidia, just points away from all-time highs at 974. Here we are trading at 950. And for this to become the biggest stock in the world, we need to trade around $1,200 per share to overtake Microsoft. And who knows, we get a crazy earnings blowout, may just gap up there. And we'll be getting the headlines, Nvidia, the largest company in the world. However, that's not guaranteed. We could just as easily gap down, and that's going to have a big influence on the market. Just looking at the NASDAQ Qs, currently sitting at all-time highs as well. So between that and PPI, they're the two biggest events that could push markets around this week. And just stepping back and looking at this bull market that started in September 2022, looking back in history against other cyclical bull markets, we could still have a lot more room to run. Average bull market will run about 32 months and almost double in price performance. Here we're currently sitting around 20-month-old bull market, and we're only up a little bit more than 50% off the lows. Also helping the picture is the huge amount of buybacks coming onto the market from S&P 500 companies, using all the excess cash on their balance sheet to buy back their own shares. That's really supportive of the stock market, with the 3-month total now approaching 400 billion. And it's not just American stocks either. We've got global stock market breadth out there. European stocks ripping up, and other key markets around the world, like China leading the world higher. A little bit of a bounce back in Japan. We can see that in the Vanguard Total World Stock Index ETF under ticker VT, actually hitting new all-time highs today. And that's a good sign for global bull market when you see a lot of participation from around the world, not just one country. And we've even got one of Wall Street's biggest bears. It's Morgan Stanley's Mike Wilson, turning bullish now, increasing his S&P 500 price target by 20% to 5,400. And he'd been bearish for years, and he's now expecting 2024 and 2025 earnings growth forecasts of 8 and 13%, and his S&P target of 5,400 is derived from a 19 price to earnings multiple on a 12-month forward earnings estimate of $283 for the S&P by June 2026. And he even said it could surge at an additional 20% to 6,350 in his bull case scenario. So hopefully that's not a bad omen for the stock market when one of the most vocal bears has just flipped. And who knows, it could be a long summer for the stock market, with some research showing we could be headed for a disappointing few months. That's David Morrison from Trade Nation. He said stocks are already so expensive, there's not much room for them to run further. And said the next move will be down rather than up. Doesn't see any Fed rate cuts this summer, and said all it would take is one hot inflation print, and that could really upset the picture from here. And he also pointed to the 2 10-year Treasury yield curve, indicating a pending recession, something the whole market seems to have forgotten about as it's been going on for so long now. And also mentioning political volatility going into the November election. And one canary in the coal mine of animal spirits in the stock market is the price action from meme stocks. Had that huge rip to start last week, and GameStop and AMC had sharp pullbacks. After, just like I said, they've both come out and wanted to issue more stock, take advantage of the high prices, replenish their balance sheet, kick the can down the road. However, the underlying business still have big problems. just like we can see from GameStop, who said they expect a 29% decline in first quarter revenue compared to last year. That's a sharply contracting business. They even said the rally in its stock does not appear to be based on the underlying fundamentals of our business. And that can quite often happen in the market. Stock price and business can be two different things. However, that stark contrast is at extremes with stocks like GameStop and AMC, and there's only so long a business can go on that's constantly losing money and secular decline. And so whoever's been buying GameStop and AMC just kind of delaying the inevitable, with a group of investors bound to be left holding the bag. And there's a look at the stock price of GameStop. Seems to have closed this gap a little bit from when it first took off last Monday. However, it could be signs of people buying the dip here. Same with AMC, still defending its low from last Monday, actually up 9.7% today. And it's not just those two big stocks from the meme category. We've got other smaller stocks ripping up, like VinFast and the really heavily traded Faraday Future Intelligent Electric. Market cap not even 100 million. Last Monday it started at 5 cents a share. On Friday, actually getting up to $3.90. Huge rip on crazy high volume, just showing a lot of people participating in this market. And we got others today like Him and Hers Health, another small cap, ripping up huge, 27%. And just as I suspected last week, Bitcoin has come back to join the party as well. Now within an inch of all-time highs on a strong rip today, up 7.6%. Big rip in Ethereum, up almost 20% today on huge volume. As we hear in speculation, the SEC may actually approve the Ethereum ETFs, something that wasn't looking so sure just a week or so ago, as we heard them push back their date and key industry insiders said it doesn't look like it was going to get approved. However, I've now got some saying they put their odds at it getting approved to 75%. Like I said, from just a week or two ago, we were thinking it's about a 25% probability. And apparently we've got these deadlines coming up this week on the 23rd and 24th for the SEC to respond to applications by some fund managers who wish to launch some Ether ETFs as well. And that's spilling over to other stocks in the space like MicroStrategy, bouncing back here. Marathon Digital ripping up 14.7% today, and a bit of a move back in Coinbase, sitting right at its 50-day. However, what is also ripping to start the week off is Commodities. Looking at a 15 chart here of the commodity equal weight index in the white, and in the US, year-over-year change in CPI, that's inflation. Currently looking at the biggest divergence with CPI undervalued relative to commodities, and that could soon close. We got gold hitting another record high today, and the market is still really underinvested in gold, and especially looking at the relative valuation of gold and gold miners as a percentage of the total global assets. For over 100 years, gold and gold miners would be about a fifth to around a quarter or so of global assets. However, here we are today at 1%, and if the world is truly coming back to gold as a global currency, central banks, those wanting to deleverage from US dollars, who knows, maybe this potentially could reach 10% or so over the coming years. It's not only gold, it's copper, arguably the most important industrial metal going forward now. Because of the boom in AI and electric vehicles, it's also hitting record highs. And even though we got oil pulling back, didn't really react much to the death of Iran's president. Like I said a few weeks ago, Israel's probably going to go to more convert operations now in order to stand up to the Iranians in a less public way. Didn't really do much to the oil market as supply is still flowing out of the Middle East and Russia. However, we still have shipping costs. Price to move cargo around the world still on the rise. Still have disruptions at the Suez and Panama canals, and with China bouncing back and their demand for imports, that's likely to keep a tailwind to shipping costs as well. And there's a look at gold today, reaching all-time highs just below 2,500. Got silver trading up. There's a look at crude holding ground just below $80 a barrel. Natural gas ripping. Copper hitting all-time highs. Uranium back on the move higher. Another strong rip up in wheat. And now it looks like we've got soybeans joining in on the party as well. So all that's not good news for inflation expectations. Maybe that's why we've got the 2-year bond yield jumping back higher today to 485. And it could be why consumers are already starting to crack. Sentiment surveys, retail sales, and retail earnings all coming in soft as of late, even though the stock market as a whole doesn't really seem to care too much about that. Just shows we're trading more on liquidity and sentiment and momentum and ignoring the health of the consumer. But regardless of commodities moving higher, which should put a strong floor on inflation, looks like the market and potentially by extension the Fed have settled for 3% inflation as being the new normal, because they're still pricing in the Fed's going to cut in September and go ahead and cut again in December, even though it would have to be a miracle in the next couple of months for inflation to dive below 2%, which is where it should be for the Fed to realistically cut and stimulate the economy again. But either that or unemployment jump above 4%, maybe 4.2, 4.3%. That could justify a cut. However, the bar is set low for a potential rate cut coming up. There's the Fear and Greed Index at 64 and a sharp spike in corporate insiders selling stock on Friday. 313 sales to 74 purchases. You often see that when the market breaks out to highs. Corporate insiders take advantage of those elevated prices. And short-term breadth still quite elevated here. 71% of stocks above the 20-day average. And new highs versus new lows still trending up. High yield bonds holding in there. Pretty constructive price action. And with the dollar still dipping below 105. Slight pullback in China. Looks to still be walking the line. Found new yearly highs again on Friday. Same with Barber and Tiger Brokers actually getting up to 472 on Friday. Been on a really strong tear those last couple of weeks. And the spread of copper versus gold having a strong rip this last month as well. That's a good sign for upcoming global economic growth. It could also be a sign of China coming back as well. There's a look at the semi sector overall. Back to trading near highs, along with Nvidia. Junior gold miners also trading strong, and overall tech having a good day, with financials and regionals leading the day lower. Momentum the winning factor, a bit of a pullback and low volatility. Another dip again here in cannabis. Could be coming back into this support zone, which could make for another good buy the dip opportunity. Apple's still holding up well there, while Tesla's still trading sideways. Really strong rip for Moderna today, up 6% after their good earnings from a couple of weeks ago. Another fall today for some retailers like Target and Macy's, and the big banks having a pullback, led lower by JP Morgan after CEO Jamie Dimon says his retirement's getting closer than he thought and they're not going to buy back as much stock if the stock's trading at highs. He's actually going to show some discipline and only try and buy the dip on their own stock. Okay, so there we are guys to start this week off. As is usual, pretty sleepy, slow start to the week on a low range. Like I said, the biggest events this week, Nvidia earnings on Wednesday and the PMIs on Thursday as we get to the back end of Q1 earnings season, which is coming a bit better than expectations. Corporate earnings are still growing, and so we've got really good seasonals, election year, technical signs, the market should drift higher, volatility really low. The only thing now is we've got ripping commodities, which should play into inflation numbers in the months ahead as they're big cost inputs for a lot of our goods and services. However, like I showed you, the market's still pricing in rate cuts come September, and that's what the Fed really wants to do as well. So the government's been able to keep a lid on oil. Let's see if they can do that with other commodities like copper and agricultural stuff as well, especially if we've got China on the bounce back and consuming more. Maybe a bit harder than it looks to achieve that. Thanks very much for tuning in and hitting that like button, and I'll see you again tomorrow night. Cheers.